Good morning, everybody. Mike Vaki, Princetontrader.com here for ntmarkets.com with your Friday morning pre-market webcast. Okay, so non-farm payrolls this morning, 8:30 a.m. We got the jobs report, and this is going to be our focus. And you've seen a little bit of a walk up in the overnight, nothing out of hand, but it's not really your prototypical walk-up trade because with all the noise of the ECB and Draghi and everything that was going on yesterday, whether that's a ramp or just a continuation of the rally or some kind of a walk up into jobs, it doesn't really matter. All that matters is we've done as high as 42 in the overnight. We've gone ahead and we filled that gap that I talked about yesterday between consolidated price and the upper band. We went up and tagged that. The way yesterday played out was very typical of 2013. We sold off early. We made that dip, that morning low between, anytime between 9:30 and 11 o'clock. It was nice for us. It landed right when we wanted it to land and where we wanted it to land, which was right on the proprietary lower level that we use in the room. And we were able to get long and ride that for the majority of the day. So, that's what's been working. Buying that morning dip, getting out of the way is what's been working. Fighting it has not been working. And until the bears can alter the current dynamic, which is having the dip buyers come in, grab a morning low, until that morning low turns into a lower high and then a lower low, this is never going to change. And let's look at a tighter chart of yesterday. All right, here's a 15-minute chart of yesterday. And you had a pop off of the press conference, the beginning of the Draghi press conference, we print 34 quarter. We go straight down from there into the 21 area as late as 10:15. So what happens here? Honestly, you get the bears leaning a little bit. They think this is it. Draghi sell the news. We're going down. But the dip buyers are going to show up because the dip buyers have showed up every day. And the easiest way to make money in this market intraday is to buy whatever dip is given to you and then just let it go. And the bears fell into the trap that they have so consistently fallen in the trap of the last 2 to 3 years. It's okay that the dip buyers come in. What's not okay is that when you make this push with this red candle here, that you can't close the deal and get back to lower lows. And so then you just see the momentum build and build and build, and now you've lost the prior high. And then you're truly in a situation that you can no longer control. And 34 becomes 40 pretty quick, right up to 40. And at that point, you're only a couple hours removed from what the bears thought was going to be the push down, and you stay basically shell-shocked, and now you've got jobs report coming up, and you have another potential for a sell the news reaction. But if you're looking at the market a little more objectively, it's potential for another buyable dip, isn't it? At least until the bears show you that they can find their car keys and make a couple of lower lows. The bears are going to have to knock the dip buyers out of the pool, and it's going to take more than once. They're going to have to do it 2 or 3 times until those dip buyers say, you know what? I can get better value next week, or I can get better value in 2 weeks. We'll take our profits. We'll come back. Bears, have your fun. Get me a better entry. Then, and only then, will we go down in a meaningful way. And the more and more, you start looking at a 2013 mentality, you're going to need a catalyst to go down. And, the jobs report may be too obvious a catalyst for that. So we'll have to see. I'm leaning more in the camp that we get another viable dip this morning. And, we'll see what happens. We're getting a little more stretched out on some of my pivot criteria. We made it as much as 56 handles from the 45-day pivot yesterday. That is officially stretched. 60 handles is officially overbought. So we're getting there on an intraday basis. Our baseline number today, though, is back down to 45. So we're not stretched coming into the day today. Now, Where might a dip be? A prime candidate for a dip would be daily pivot at 33.5. I like 33.5 to 34 quarter as a potential dip area on a negative reaction to jobs. Remember, don't game jobs. You're an individual trader. You have no bearing on what the reaction is going to be to the jobs report. It's your job to find the top of the range, find the bottom of the range after the report comes out, figure out which side is going to win, and jump on that bandwagon and ride it to victory. I think a prime candidate for the lower end of the range is 34 quarter to 33.5. On the upside, 44.5 to 46, at least, right out of the box after jobs. So again, don't make any big decisions at 8:29 in the morning Eastern time. You may be right or you may be very, very wrong. It's not worth it. Okay, everybody have an amazing trading day. Have a fantastic weekend. Check us out on Twitter at Princeton Trader. Come check out the website. Come check out the chat room. Come trade with us. Come trade some of this stuff. Come trade these dips. We're having a lot of fun doing that in the room, and I hope to meet you, and I hope you'll join us. I will be back Monday morning with another webcast. Trade them well, everybody.